I think you see that especially. I don't want to call it a trap, but it's a bit of a trap, I guess. If you're, I know friends who went off because they didn't really know what they wanted to do out of college, so they went on into law school, right? Couldn't figure out what they wanted to do, so went to law school. They got through law school, they got a good job at a big law firm, and they've been kind of slowly climbing the ranks, and now they're making 500 grand a year. And like, how do you leave that to go start a startup?
Welcome to Next In. Today I have the pleasure of speaking with Nathan Beckord, CEO of Foundersuite and Funding Stack. I had to practice that a couple of times. I dare anybody that's listening to try to say that 5 times fast because I don't know if I could do it. But how are you doing today, Nathan?
I'm doing great. Yeah, it's a bit of a tongue twister, but it gets easier over time.
It keeps things interesting. I'm in Nashville, Tennessee, and I have to imagine there's at least 1 or 2 people willing to like write you a jingle to get people to say that as fast as possible.
Oh, I like that.
I
That's a
probably
good
finished with
idea.
somebody. I don't know. like,
That would be cool. I'd like a little jingle. I could do a country version, maybe a death metal version, maybe a trance version, all kinds of good versions. Yeah, I like that.
I think everyone right now, everyone in the industry is doing some sort of country something. I feel like it doesn't matter if you're in rock, you're in rap, you're in whatever. I feel like country and Nashville is where everybody's at. But maybe that's a bias that I'm holding on over here. So, but where are you coming from today, Nathan?
I'm out in Marin County, California, just north of San Francisco.
How long have you been out there for?
So I've been out in San Francisco for like 25 years. I've been in Marin for about 5 years. We moved up here just getting to the suburbs when the kids hit a certain age. It's kind of this annual migration that happens of people living in San Francisco moving to Marin. So that was our pattern.
So I have to ask because this is going to be top of mind for everyone. Over the last couple of years, I know Silicon Valley, Seattle, they've been kind of like the top tech hubs. I mean, you could throw New York in the mix there too. And over the last couple of years, there's been these conversations of like what the Bay Area is like right now. I know that there's a lot of companies that were in the Bay Area. They've gone remote recently, and then a lot of people are starting to drive people back into San Francisco to like return to work policies. I mean, what is San Francisco like right now? Honestly, I haven't been in 2 years since GDC, and it was like the zombie apocalypse 3 years ago at the GDC conference that I went to.
Interesting. Zombie apocalypse. Well, I think you would notice a pretty big change since then. So I moved out to San Francisco in 1995. That dates me. That was right out of college, right? I moved to San Francisco. And so I've gone through, right, if you go back in time, that was the start of the web 1.0 bubble. Started around 95, 96, really picked up speed 97, 98, 99, and of course the crash in 2000. And it was insane then, and then the crash happened, and I remember there was like a 6-month waiting list for U-Hauls to get out of San Francisco, right? And then so it kind of hit a low point, and then it sort of picked up again, and then of course was it 2008 financial crisis, right? It had another downturn, and I've gone through like 3 cycles already, and to answer your question, I feel like we're back. We kind of hit that low point, and we're on the upswing. And my data point there is, I just finished a week of SF Tech Week, and then TechCrunch Disrupt, which was like 2 weeks later, and we just finished that up. Tech Week had 600 events spread around San Francisco over the course of like 5 or 6 days, which blew my mind, right? This is sort of organized by Andreessen Horowitz and loosely organized by them, and lots of other startups will like host events and parties and happy hours and stuff like that. So there was 600 stuff. And then TechCrunch Disrupt was huge and probably had an equal number of like side events and parties. And so to answer your question, I really feel like this year, like, I don't want to say we're back, but it's definitely we're coming back, right? I feel like
Yeah.
we're back on that upswing. And some of that's driven by AI, because I would say maybe like 50%, maybe more of all those events were like AI for startups happy hour, AI for da-da-da. A lot of it was AI related or driven. So that's definitely a factor in bringing back San Francisco. But, I'm bullish long-term on San Francisco. It's just a beautiful place, and there's a lot of talent, and you got the Stanford and Berkeley and all the schools and stuff that hell expensive as hell, but like I'm bullish long-term. So I'm excited to see it kind of back on another upswing.
Some people like to say you pay what you get for. So hopefully, right? But I know that for you, right? Like being at Funding Stack and Foundersuite, like you're on the pulse of everything that's sort of startups, which is something that I'll definitely want to get into here in a bit, because it's just like, what does the San Francisco startup scene look like today in comparison to what it did? Because I think that I've had conversations with founders all the time where it's like, where do you need to be to most likely get capital, right? When we're trying to raise money, should I be in Seattle? Should I be in New York? Should I be in San Francisco? Should I be in Nashville? Should I be in enter the blank? I know Seattle is one of those places where people like to think that a lot of money gets deployed up there, but it's significantly lower than other markets.
Yeah.
Which is always like a really interesting conversation, which again, I totally want to get back to in a moment. But before we do that, I really honestly just want to kind of talk about you, which is, you're the CEO of Foundersuite today and Funding Stack, but you didn't just immediately jump into that. Like that's been a journey. There's been some ups, there's been some downs, and there's been a bunch of stuff in between. But I'd like to figure out, there was a spark that started in Nathan somewhere where it's like right out of college or in college, you're like, this is sort of what I want to do. And then there was this journey that got to you to where you're at today. So I'd love to sort of just take a step back and go, first job, like what were you thinking? Why did you do it? And then let's walk through and kind of unpack some of that.
Yeah, totally. So, I mean, it's like a psychologist. How far back do I go? Go back to childhood. I mean, even as a kid, I was pretty entrepreneurial. Like I would have a whole bunch of little side hustles. I had a little Yamaha YZ80 dirt bike, and I would take it up to the dirt bike track area, and then I would bring a book and like rent it out to kids for $10 an hour while I would sit there and read. Or I remember one other little side hustle. We lived in Colorado, and I would get my dad to drive me up to Wyoming every couple months where fireworks are legal, and I'd buy a whole bunch of fireworks and then sell them at a huge markup to kids, whose parents wouldn't let them buy fireworks. And these are like cherry bombs and, like the good stuff, right? So always kind of had a little bit of an entrepreneurial flavor to it. And then came out to college in California, Santa Clara University. And, that's sort of at the southern end of Silicon Valley, right? So you got to work at some of the bigger companies like Applied Materials and like big, tech companies there, and got a little flavor for that. So I had a feeling I wanted to be an entrepreneur, but, it's hard to do that right out of college. I feel like it's easier these days to just get out of college and start a business, where it wasn't really so easy. So went down a different path of investment banking, and that was helping companies mostly raise capital. Actually started during the dot-com bubble as a stock analyst, analyzing all these IPOs, all these like startups that were going public, and, learned a lot about it, kind of how companies are capitalized and formed and ultimately exit. And then spent a little time in New York in JP Morgan's private placement group, which was helping companies raise later stage rounds of capital, like Series B, C, D, and mezzanine pipes, which are a special type of vehicle and stuff like that. So kind of learned about how to raise capital for companies, but really the investment banking lifestyle wasn't a fit for me. It's like I got a job where people would sell their firstborn to get, but I'm like, I don't really want to do this. I want to create something. I want to build a business. So long story short, back out to California, didn't have a job out of grad school, and just started helping startups like build their business plan and pitch deck and financial model, right? Because I knew how to do that. I've been trained to do that in investment banking. I was really good at building financial models and pitch decks. That's kind of the work you do, investment banking, for your first couple of years. And so did that for startups for a while. And all the time I was like, I got to come up with some startup idea. And I was always thinking about it, but I didn't have any good ideas. And then to connect the past to present, finally had this idea, like, I know how to raise capital. Why don't I build software for raising capital? Because there wasn't really that much out there for that, right? You had a few investor database tools, but there wasn't like anything to really manage a pipeline of investors for startups, and hence Foundersuite was born after kind of a long journey to get to my startup idea. That's where I got to.
I mean, I'm going to ask the question that I think you're not supposed to ask anybody, right? Like, how old were you? I'm just kidding. How old were you?
No, fine. When I started Foundersuite?
Yeah, like how old were you when you finally decided to take a leap of faith to be like an entrepreneur and like start your own venture? Because I know for a long time, you were I think you were an advisor for a good period of time before you you were an analyst, you were an advisor, and then you started your own company. Is from my understanding,
Yeah,
right?
that's correct. I mean, after leaving JP Morgan, I started a business called Venture Archetypes, which is a consulting business. So it's, it's still starting a business, it's still entrepreneurial, but it's a consulting business isn't a startup, right? The consulting business is a consulting business. So that's a different animal. So I started that when I was in 30s, late 30s, and then took the plunge and started a startup, Foundersuite. I guess I was like or mid 40s, so kind of on the later side. But I've seen little posts. I mean, I think we all have our news feeds, feeding us what we want to hear, right? But I've seen some of these posts with like average age of founders based on like exits and stuff like it. Oh, look, it's actually kind of skews older, right? Even though, stories like Mark Zuckerberg starting Facebook right out of college are big but rare, So mid 40s, kind of on the later side. So
I always find it funny that like the exceptions are the ones that people talk about the most, right? And the exceptions feel like they're the norms when they're not. Like the exceptions are the exceptions. The norm is people that are in their late 30s, mid 40s that are likely getting into doing startups. And I hear all the time where people are like, well, I've invested all this time in my career. Like it doesn't make sense to do a startup today. I'm curious, like, what your opinion is on that, because like I hear it all the time. Like my father has said it so many times where he's worked for a bunch of like Medicare Advantage companies, like, and he's always said like, one day I would start my own business. And then now he's at the point where he's just like, you know what? I've invested so much into my career. There's no reason to take it and go start a business because like I'm just going to waste my time and waste my energy and it's going to take too long to make money. Like, I'd love to hear your thoughts on that.
Yeah, it's a great point. I mean, I think you see that especially. I don't want to call it a trap, but it's a bit of a trap, I guess. If you're, I know friends who went off because they didn't really know what they wanted to do out of college, so they went on into law school, right? They couldn't figure out what they wanted to do, so went to law school. They got through law school, they got a good job at a big law firm, and they've been kind of slowly climbing the ranks, and now they're making $500,000 a year. And like, how do you leave that to go start a startup? You're kind of trapped, and not only is it the salary, but in many cases their lifestyle has expanded, so to speak, along with that, with whatever it is, second home or vacations and cars and whatever the trappings are, right? So they're like, I've got like 2 houses, mortgage payments, I can't really leave to go do this, right? So it does become a bit of a trap. Doesn't mean it's a bad thing. I think there's also a bit of it's almost like if you graft sort of your experience on one hand and then your sort of energy level on another hand, which is your experience is increasing over time, right? Your energy level slowly kind of like, I think it'd be hard if you're in your 60s or 70s. This might be ageist, but to start like a real startup that you got to grind, 12 hours a day, 6 days a week for the first couple years, that might be hard if you're later. So I'd say it was almost a sweet spot in your late 30s to early 50s. That might be like a great time. But if you're trapped, in your salary and mortgage payments, that's hard to do. So there's the argument for doing it, early, right out of college when you can take more risks. Do you want to optimize for like your ability to take big risks, knowing you can probably go get a job later in life? Or do you want to build up your network and your experience and then, take the leap when you've sort of optimized that and have a good network, right? Because it's easier to raise capital and things like that if you have like a network, you often don't have that right out of college. So I don't even remember what your question was. I don't know if I've answered the question.
That's okay. Like it was sort of like, when is it, like, it was almost like, when is a good time to start a startup? And sometimes I've always like compared it to like, I don't have children, but like I imagine what it's like having a child for the first time,
Yeah.
because I've seen it. And sometimes I'm like, well, it's kind of like having a child. Like you're never truly ready for it, and you don't know
Yeah.
if you can truly handle it. But at least this one doesn't come with an 18-year commitment. Like,
Yeah, that's true, but I think there's a lot of parallels between that, right? Because if you do raise some money, now you have a commitment to those investors, and that can be several years. You've got an obligation to try and get the business exited, um, and I think that energy level part is important too. Like I kind of jokingly say, I probably don't have another startup in me after this one. Maybe a little lifestyle business or some fun business, a pickleball center or something like that, right? Something that's kind of fun. But like, yeah, those
midlife
early
crisis
couple
farm.
years are brutal, getting product market fit. And especially going back to kind of your dad, like one of the shocks after coming from investment banking where you have expense accounts and the black card drivers pick you up and you can all order food if you stay beyond 6 o'clock and all this trimmings and trappings of working there. And then you're on a startup, you're like, there's no expense account. You're flying Southwest on the gotta get away low cost fare option. Like it's a different world, but it's
You're like,
fun.
I'm
It's more
a
fun.
baller on a budget. You become a
Yeah,
baller on a budget. I always think
exactly.
it's funny because I also say all the time, like for me, I could totally go get a job somewhere and probably some years would make more on a W-2 employment than I do in my business, right? Like I've had plenty of times where some of my recruiters were crushing it and my recruiters outperformed my own personal earnings,
Yeah.
throughout the years. And some people, they don't have the humility and they don't have the patience for that thing to happen. And I almost feel like, as an entrepreneur, it's a little bit of self mutilation. Like you sort of have to be a little crazy to do it at times, right? And
Totally.
I always find that really interesting. So when you decided to take a leap of faith, do you imagine you had like a mentor, you had somebody that you looked up to that coached you, guided you, something to even allow you to feel comforted and supported to be able to do something like this?
I mean, not really. A good my wife is awesome. She's, like kind of a joke about this sometimes. When I went off and said, "Hey, honey, I'm starting Foundersuite. Probably not going to earn any money for a while. Give me a little leash here. Give me a nice long leash. Give me a year to get this thing off the ground. And if I can't get it going in a year, I'll go back and a year turned into 2, into 3, 4, 5, right? Like, so that's been really supportive. And I think that is helpful too, because she's got her own business too. She has a tutoring business that's very stable cash flow business, right? It doesn't have the wild swings of a startup. It's reliable. Having that in your world is invaluable to kind of even out the wild dramatic swings. Didn't really have like a strong mentor. You know, so I think just having good people around who you can help. I mean, my dad gave me 30 grand or something as a loan to get the MVP built. So that's helpful. Not everyone has that advantage. That was definitely
Yeah.
a leg up. And yeah, I don't know. Yeah.
I always think of, for me, one of the things that I've always said when people ask me, like, who was a big mentor in your life? Similar to you, I don't know if I necessarily had mentors, but I definitely had like a support system and a
Yeah.
structure that allowed me to kind of like have a stabilized environment to reduce some of my emotional risk, right?
Yeah.
But I've always said that like my failures, my mistakes, those are like my biggest teachers. Those were the things that helped me learn the most. And those were my biggest mentors in life is like, I took a leap and I fell on my face and I fell on my face hard, you know? I have 5 sets of stitches in my face, both physically and emotionally, probably. So
Uh-huh.
for you, I guess, like, can you ever point back to like a massive failure or a massive mistake that you made that you believe was a catalyst to helping kind of shape who you are today?
Yeah. I think when I first went down the path of saying, okay, I want to start a startup, spent a few months trying to find uh, a technical co-founder, because I needed someone to build this darn thing. I've got this idea for like software for raising capital, but I can't build it myself. I'm a finance guy. Um, spent some time doing that, and then finally hired an offshore development firm in Poland, which I think can be a huge mistake. Like I know a lot of people make that mistake of hiring these offshore firms in wherever, India, Pakistan, Poland, Eastern Europe, and that can be a big disaster. Worked out. We got very lucky. I'll give them a shout. CodeQuest in Poland. Tell them Nathan sent you. But then I tried to be the product manager myself, and I was designing the product, and with a whiteboard and coming up with what it should look like, and of course, like adding every time you talk to somebody, like, well, I like this idea, but it really needs to have XYZ before I would consider subscribing. And so then, it starts to like sprawl and become this huge feature list and all kinds of stuff that, like, oh, I'm sure as soon as we add this bell or this whistle or this button, it's going to go viral and go crazy. And I would say that was kind of a big mistake, because now I'm designing this product. It's starting to look like there's a great Simpsons episode where I can't remember exact setup, but Homer is granted the ability to design the car of his choosing. He can like design his own dream car, and it comes out as this like absurd looking thing, with all kinds of things hanging off it. It's a disaster, right? And that's kind of how I feel like our first product iterations were, right? Fortunately, it wasn't so bad that it didn't kill the company, but maybe the takeaway there is, as soon as you can, hire a product manager to help you actually build the product, and really tune into your customers, listen to what they need, being able to separate like this feature wish list from what the core things are. That's like the takeaway, I think, from that mistake of trying to design my own products, basically.
Versus entering the rat race of like, what is the enlist customer request that is not going to drive revenue. It's not going to drive user adoption. It's not going to increase all of the things that are important and the KPIs that matter. And instead, it's like, I've got a giant thing of checklists that are going to cost me an arm and a leg.
Yeah. And the product becomes like needlessly bloated and confusing, right? That's the worst thing you want when you're a startup. You got to be lean, mean, and solve like one single product or single problem with a simple product. Let me repeat that. You need to solve a single pain point or problem with a simple product, and then kind of grow out from there. Right.
Yeah. One of the things that I was taught really early on from a mentor of mine was the number one thing a CEO is responsible for is saying no, and
Sure.
understanding how to say no, when to say no, and understanding that like there's going to be a lot of voices that are going to come after you, whether that's a customer, whether that's internal, whether that's external, whether that's family, whether it's somebody that's never going to use your product, that has a lot of opinions about your product, even though they're never going to buy them. Right. But like there's the endless amount of voices that can try to ask you to do things. And it's like, what voice do I listen to? I think that's always kind of an interesting one that I hear all the time, that especially early stage founders, it's like, are you listening to the right people? And do you know who that is? And I think that's where the product manager really comes into play, right? Is like, they very uniquely are like, we know who the customer voice is, and the customer voice is the one that we're listening for. And we're only listening to the customer voice because the other thing can be very distracting.
Totally agree with all that. Absolutely.
Yeah. So, I've been hearing like, I want to ask you this specifically just because of where you're at. You're talking like you're helping founders, you're helping people, track their funding, you're helping people get ready to pitch. And I have to imagine there's all these ancillary conversations throughout that, which is like, do you know somebody? Like, where should I be going to get money? Right. You're in the stages of helping them track the stuff. So I have to imagine your fingers on the pulse in a lot of ways. And I want to dive into that. But like one of the things that I hear all the time lately, it's like been a common theme, is like everybody feels like there's this bubble coming up. They're like, we believe that this is going to be like 2008, 2009, and like we're entering into that same bubble. I'm just curious, like what's your opinion on that?
It feels a little bubbly in AI, and
Okay.
AI is going to be. It is already becoming, game changing, revolutionary, things like that. But you're seeing these crazy funding rounds, huge funding valuations, and just a lot of startups getting funded. AI for this, AI for that, right? And it does remind me a little bit of like I keep thinking the parallel to that web 1.0, right? Overnight, there was a web company for everything under the sun, pet food, socks, whatever it is, right? And very few of those kind of survive the shakeout. So I think there are definitely parallels, right? History repeats itself over and over again, not just in tech and startup world, but in many ways, right? And so it does feel a little bit bubbly. It doesn't feel like insanely bubbly yet. I think it's for every startup other than AI, like they're still kind of struggling. I'm hearing a lot of chatter and discussions with our customers and users like, hey, I'm really struggling to raise money for my business. It's not an AI business. It's a really good enterprise software business for this, or SaaS or whatever it is. So I guess my answer is it's a bubble in a really big bubble in one kind of narrow category.
Okay.
Versus previous generations like Web 1.0 or even Web 2.0, which it was much more broad focused bubble, right? So I think that's kind of good for the overall market if it's just a narrow bubble, because then if that pops, it doesn't take everything else down. But I think it's also good too, because I mean, like, we're integrating AI into our product, and just like web became, internet and web became into every type of business and product. I think we're seeing that with AI, so it becomes like sort of less of a focus thing. And yeah, I think the market, I'm optimistic. I don't want to get into politics, but I think the market should be improving over the next, year, just with hopefully lower taxes and things like that, maybe a better exit environment under a new administration. Again, I'm not going to get into politics about that, but I think it might be a slightly more favorable environment in the coming years for exits, which, if things are getting going IPO, if startups are getting exits, IPOs and M&As, that kind of pulls up, investors get more active at funding earlier stage startups. It kind of pulls up everything below it, right? So I think that's a good thing.
Well, once people start recollecting their money, they start to redeploy it relatively fast, right? And so that was sort of going to be my next question is like, I mean, I know you're not a wizard, right? But if you were to like attempt reading the tea leaves and you looked at 2025, like where do you imagine capital is going to be deployed? I mean, that could be cities, that could be domains, that could be whatever, but I don't know. Is there a common trend across the portfolio groups that you see raising capital?
Yeah, I think my prediction is the overall startup funding landscape will improve quite a bit in 2025. It's been pretty tough. Actually, 2024 was a pretty tough year. Again, other than AI companies, it's been tough to raise money. Then that's on the Foundersuite side, right? So we have a couple thousand startups using Foundersuite to raise seed, angel, VC rounds, and then we have a couple hundred venture funds using Funding Stack to raise capital from LPs. So they're raising new funds, and those guys and gals are struggling too, right? It's been very hard on both sides. And so I think I'm actually pretty optimistic that 2025 will start to see kind of the thaw in those markets for the broader based venture firms. Emerging managers will start to see some action. A lot more family offices coming into the market, so that's kind of increasing the pool. If we can have a healthy IPO environment, like you just said, that's going to recycle a lot more money back into angels, create a new batch of angels, right? I mean, Silicon Valley, the beauty of Silicon Valley is, and why it's been so strong for so many decades is, again, it's a cycle. You have these companies, originally it was, chips, silicon stuff that start, grow, found, exit, and create a couple hundred multimillionaires. Many of them go off and buy a Tahoe home, but many of them stick around and start angel investing, and that creates a new generation of entrepreneurs. And so every cycle, right? I mean, when all the Facebooks and LinkedIns of the world went public, that created a huge new army of angel investors that just further increase the funding that's going into early stage startups. We might see some of that in AI, right? Some of these companies might get acquired or possibly go public. Maybe not in 2025. I mean, it might be the next 2 or 3 years, but then I think that will create a lot of money kind of flowing back in. So I guess to the location thing, I'm pretty bullish that Silicon Valley is still going to be pretty dominant because it's such a hotbed of AI right now, and so that's going to create some additional wealth here. But COVID really changed the game of where you can start a startup, right? You can be in Nashville or LA or even Tallinn, Estonia, or whatever, right? And have pretty good odds of getting off the ground. So I think things will spread around. That was a long answer, but yeah.
No, I think that's all good stuff, and I feel very similarly. I think that I'm really excited to see what comes out of the next year. And like you, it's just like I would love to see some exits happening, so we can start seeing either A, people starting to become angel investors again, B, seeing those teams, those founding teams, go out and build new companies. I mean, you see that all the time, which is like I think one of the things that was always very common in Silicon Valley is like you have these executives that are your seed to A or your seed to B founders that are constantly encouraging that thread of getting new capital deployed and then going back and starting over and over again, right? So I know that there's always been the argument of it's like it feels like the same founders are the ones that are getting funding over and over again, and it's just like, well, like statistically they're like the ones that are constantly making sure that that money is getting returned. And it's like,
Yeah,
can you become a part of that tribe? Can you become a part of that pod? Because it's not very common where you see like the same CEO, CTO, and COO restarting companies over and over again. Matter of fact, it's very common for you to see those three kind of branch off and plant three new seeds,
totally.
or two new seeds in an angel investing tribe. And like it's really cool to kind of see what comes out of that and how that redistribution ultimately looks like. And you do see a lot of them where they go from like the San Francisco's very successful, and then they come to the Nashvilles and they start supporting kind of the Nashville community. I know there's a lot of founders out here that raised money in San Francisco, and that's actually encouraging funds to start coming out here. Just because I know like one of the things that I always thought was kind of interesting, that's always maybe let's call it grinds my gears a little bit, is there's multiple VC funds and private equity firms that are in the state of Tennessee, but it's not and specialize in healthcare because Tennessee happens to be a giant healthcare hub. Um, but their money's still being deployed in San Francisco, New York, and Boston for healthcare. And I've always thought that was so ironic, which is like the funds are here, they're helping the companies here, but it's still getting deployed to the Bay Area.
Yeah, I don't know what to say about that. I mean, I think capital is even private capital markets. Public markets are very efficient, extremely efficient. I think private capital markets are also pretty efficient for the most part, right? So capital is going to flow where it can get at the highest return. Um, but that can change over time, right? I mean, look at Austin as a good example. I went to business school there, and there were some venture funds there then. Um, but it's kind of come into its own right as a place to start a business and grow a business. And some of that's because tech companies have moved their headquarters, or even just not their headquarters, but a lot of offices there, a lot of tech talent, and a lot of capital has popped up there. So it's become its own sort of self-sustaining ecosystem in many ways, right? And I think maybe Nashville's just a decade or 5 year, I don't know, 5 or 10 years behind that cycle, but it's also on its path to becoming a self-sustaining ecosystem, right? So I think I'd be optimistic, even it might be annoying now to see the capital flowing out to Boston-based healthcare companies. Give it time is my response. So, yeah.
Well, before we close up, Nathan, like I guess I want to chat like a tiny, tiny bit more about Foundersuite specifically and what you guys are doing right now. Are you guys growing? Are you guys hiring? Help me understand that a little bit. What your guys' current situation is.
Yeah, so it's a fun time for us. We've been doing Foundersuite for going on 8 years now, which is kind of a long time for a startup. And we're closing in. We're probably already over there. We haven't done a tally yet, but we're closing in on about 100,000 startups that have been on there over that time period. So that'll be a big milestone. We just finished, or we're actually giving 2 more days, and we are finished our big rebuild. So we kind of rebuilt the entire platform from scratch, and we're done with that in 2 days with the launch of a new investor update tool. And then we get to go in and do some fun stuff. So we're, we think about like raising capital, and there are friction points at every step in the way, right? Raising capital is still very hard, even in 2024, with all the tools and databases and everything out there. It's still very hard. And so we're just thinking about like, how do we reduce friction in every little micro step of the way? One of the things we're going to come out with pretty soon is like a get intro button, right? We've got our database of investors to help you build a list of a couple hundred, healthcare angels or healthcare VCs, whatever it is. And now we're helping you figure out how you can get connected and get those warm intros to those people. So that's really fun. We're hiring slowly. It's been the go-go years were like 21, 2022. Like things were growing like gangbusters. It's slowed down a little bit because our customers are struggling a bit to raise capital. So we're a little like conservative in terms of like hiring and growth right now. But again, I think 2025, I'm pretty optimistic about this. Not only the combination of possibly a more favorable market environment where more startups are going public and creating a vacuum that pulls in new crop of startup founders, but also some of our cool features that I think will help get more startups funded. I think we'll be back to a nice, aggressive growth phase again here soon. It's a little tricky. Like we're a little bit like the canary in the coal mine because our customers are startups. So I kind of know like if the startup market is tough or thriving, and it really is almost either of those scenarios, right? It's rare. I can only think to a couple times in the past several years where it's been like steady. It's usually either dire or booming, kind of binary in many ways. So we just have to ride out the tough times to be ready when it's another boom time,
Yeah, I mean, 2024, it's like everybody's like mantra was like survive until 25. I hated it, but that was a real reality, and for a lot of people in 2024 was like survive until 25. I know that in our industry, for like specifically any recruiting agency that only did video game recruiting, because we do that quite a bit of that.
Yeah.
I think 85% of them shut down, which
Wow.
was wild to me, just because of the redeployment on like what was going on in that particular industry. And video games wasn't the only ones that felt that. But I'm really excited for 2025, and like you, I am very optimistic about what 2025, 2026 is going to look like with interest rates and everything else adjusting. We'll see. But I'm very optimistic for the future as well, and I believe that, very similar to you, that capital will start getting deployed into a lot more than just single threaded markets.
Yeah, I think so. Yeah, I would leave with like, you kind of have to, I've heard this metaphor of like the surfing metaphor in the past, right? Where you kind of have to be on your board, already paddled out, and be in the lineup ready for when the next set of waves come in. You can't, oh, look, a new set of waves are coming in. Now I'm going to paddle out. You kind of have to be in the market out there ready in the right position to catch that set of waves, right? And I think that's where, looking at where we're at in late 2024, just be in the market, right? Keep your business from going under and keep moving forward as best you can. So when that turnaround happens, which can happen really fast, we've seen
Could be
multiple
tomorrow.
times. Yeah. So you're ready to catch the next wave of growth. And that's my optimistic view. That's kind of what we're thinking.
Perfect. Well, Nathan, I really appreciate you taking the time to speak with me today, and everybody else that's listening today. Thank to you as well. If you want to follow Nathan Beckord on LinkedIn. Check out foundersuite.com, fundingstack.com. Is there any other way that somebody should reach out to you if they want to get a hold of you, Nathan?
LinkedIn's really good. Yeah. And mention, maybe you saw me on Shane's show, and happy to connect, but I post quite a bit of good startup and fundraising related content on LinkedIn. And so that's a good place to connect. I'd love to connect with you there.
Perfect. So you heard it. Follow Nathan on LinkedIn. And for everybody that is listening, thank you, and see you next time.